Okay. Well, welcome. Weekly Roundup, September, what is it? 23rd.
23rd, yep.
Man, flies by.
This month really has.
I know. And I wish we need one of these where we can say, hey, what a great day in the market to finish the week, eh?
It's coming. It's coming. We get closer every correction.
Let me start off, and then you can kind of jump into it, because I think this will be a good jumping off point. Dow drops nearly 500 points to close at new low for 2022 on rising recession fears. Right?
Amazing.
So if you're watching this right now, don't click off, okay? Because Ben's going to explain it and tell us why we'll be okay.
Yes.
Here we go.
Here we go. Okay.
Over to you.
Yeah. So, yep. The stock market's definitely corrected into. Actually, just want to see, is my speaker on? Okay, because I think. Okay, I'm good to go there.
Yep.
Yeah. The market is corrected since Powell's meeting on Wednesday. So as I think a week ago when we spoke, I said this week could be a big week to see what the U.S. central bank says. Had some really interesting conversations with people this past week. At a couple of the different fund companies that we work with, a couple of the managers had kind of detailed conversations about the economy, specifically with one, and then maybe a little bit more of the micro around Canadian housing and rates and things like that. So give an update on that. But yeah, markets have corrected into that. Bonds rallied today. So the yield curve is the most inverted that we've seen since this year. So not exactly sure where we finished the day, but it was minus 56 basis points this morning when I looked at it. So pretty big inversion. So that, of course, has knock-on effects to the financials. So, if financials borrow short-term rates and lend long-term, they're not taking a pickup there in spread. So financials touched new 52-week lows today in Canada, not in the U.S., but certainly some corrections there as well. So yeah, lots of news, both company wide and economic perspective.
Right. So were you did you end up doing anything in the portfolios this week, or were you just holding tight? I think I saw a few things.
Mm-hmm.
Yeah.
Yeah. So today I added to Intel again.
Yes. That's what I saw,
So I've been incrementally adding to that. Intel at these levels is paying a 5.3% dividend yield, and they revised their guidance. Again, as I look at this, there's that combination between short-term, long-term. When we think about it, the stock is now down year to date 46.5%, 60+% from their highs of last year. So I look at this from the perspective of, at some point we're going to find a bottom on this. This is a good company, has lots of potential, and so I did add to that position. The other one, which I started initial position on, just small, very small to start with, was BASF. As we think about what's happening around the world, and just really where I think a lot of the damage has been done too, is in some of these markets. And BASF is a company that I think has, again, a similar good risk reward, down 50+% or so from the start of the year. And as we continue to look through all the businesses and the balance sheets, there's so many good ones to look at. And I really struggled on the timing of not getting more aggressive. So it's been a real challenge to just be patient and see how this plays out, because I think there's so many opportunities that keep popping up.
Right. Okay. What do we? You said you got a few slides today. What do you got for us?
Yeah. So let's get his
charts.
Let's get the
Ben's charts.
All right, just on one screen today, so I'm just gonna have to give it a share and then do a quick change.
Keeping it moving here because Carp Fair weekend, right? Carp Fair weekend this weekend, so gotta get over and see the giant pumpkin before it's too late.
You doing that?
Maybe on Sunday. Kids are going tonight, but maybe Sunday.
Of course they are.
All right,
It's
what do we got?
nice.
We got a panda here.
We got a panda. So I talked about this a little bit, I think maybe last week or the week before, really just talking about Canadian housing and what's transpired. We talked briefly about the differences with the banks, right, and how they did the variable rate mortgages with 40+% over the last 2 years have been variable rate. And so this is a snapshot of a person's actual mortgage statement. And so this is with TD specifically. And so as I said before, they do a fixed payment. And so as rates rise, less of the principal gets paid. And if rates fall, more of the principal gets paid. So what's happened though is we've reached this trigger point where there's not enough payment to cover the actual interest. And so as you see, if you see in this highlight section, remaining amortization period 100 years and 9 months. So that's a little bit long. And
Yeah.
so so obviously the financials are offside. So one of the conversations I had this week was with individual that is quite familiar with what's happening right now, because it's one of the things that I think about as a systemic risk in Canada, is that we have a real estate market that's highly leveraged and has been driven by low rates. And so one of these questions that I've been battling with is what happens when the banks come back to people and say, okay, your mortgage payment has tripled. That obviously has massive ripple down effects, foreclosures, bankruptcies, economic disaster kind of thing. So the banks, I know, have been working quite hard. And with my discussions with this guy, he was telling me that OFC is working with the banks, who's the regulator of the banking system, is working with them to come out with a plan that says we can't increase your mortgage payment more than a certain percentage, hypothetically saying, if you're paying 2,000, we can't increase it by more than 50% of the current mortgage payment. And what that will do is it'll give them flexibility to stretch amortization, not make it 100 years, but maybe stretch it out to 30, 40, 50 years, something like that, to kind of match the liabilities in order to avoid some of the potential risk with the real estate market that we have today. So
That's crazy.
yeah, so it is crazy, but again, I mean, certainly any questions about it, we can dive
Yeah.
in a bit. But what this means to me more is what happens then with Canada and rates. And it's made me think really that the Canadian central bank is, maybe they have one more increase, but I'd be quite surprised if they do. But I think they're closer to the top of rates than you would see potentially in the U.S. And as a result of that, you've seen actually Canadian bonds do a little bit better than U.S. bonds this week. And potentially that's a theme that I'll explore a little bit more as this evolves. But I thought this was super interesting information.
It is. Yeah. It's really interesting.
Yeah.
All right.
So the last one, and that I've been talking about in the daily, is really employment. And the central bank in the U.S. has talked a lot about that. It's really that kind of last man standing, from the perspective that the employment numbers have been pretty good. And so I thought this was worth looking at. Real earnings obviously quite negative because of inflation, and U.S. unemployment rate. There's not really a lot of room to go here. So as we look at these yellow lines, which are the historical recessions, it gives you kind of an indicator to think. As we start to see a small uptick here, it does look like we're seeing some of these other events in the past. And I think this is going to be an important metric to watch. Certainly in Canada, we've had 3 readings in a row of rising unemployment. That's the other thing that leads me to believe that the Bank of Canada is much closer to being done than the U.S. at this point.
Got it.
hmm And the last one, excuse me, this is the last slide. And so if you look back, there's a number of companies in the US, maybe a handful, 4 or 5, which have been pretty good indicators for the health of the economy. And this is a chart of FedEx since, well, this is a 10-year chart, I guess, so 2011. Just to give you a sense of how the company has ebbed and flowed. If you overlay US GDP, it looks pretty identical on top of this. And what we saw with FedEx this week is we saw a pre-announcement, and I think it was actually a week ago today. We saw a pre-announcement that they're going to miss earnings and revise lower, and so the stock's down, 25-30% from that announcement a week ago. And it just gives you, these are some interesting signals to think about from where we are in the cycle and really kind of the health of the U.S. economy. The one thing that I'd like to draw attention to, though, from this perspective is that the market and the economy are interconnected but not the same. So as you see this material correction, it actually does make me say, okay, let's look at this business now, starting to pay a 3.5% dividend because the prices come down. Where's the floor on it? This is kind of the longer term. You can see the longer term trend lines that we've bounced off it a couple of times, and we're approaching those kind of lower lows again. So this could be, again, from an opportunistic perspective, something worth watching and continue to think about when we get on the other side of this. This would be a good company, a good high quality company to own in portfolios.
Right. Yeah, it is interesting. Okay. That's it, eh? For the slides, it's like a record low for you.
I think so.
Yeah, even though we have a 3-slide max, you like to break the rules, Ben. Let's just be honest. That's why you're successful.
Yeah.
You like to break the rules.
Yeah.
All right. So what are we looking at for next week? Are we a little of the same, or much of the same, or what are we thinking?
Yeah, so this year has been really taped with high volatility. And so we've had throughout most of this year, we've been in this elevated bucket. And so I think I've talked before, as we get over the 30 vol on the US markets, which we are today, that's when things start to break. And so, that's why we saw quite a bit of pressure kind of selling overall. Most indices that I track are touching oversold levels this afternoon. And so I'd expect some kind of bounce next week. What it looks like, obviously, there's a lot of things that can go into it, but we're getting into the end of September, I guess. Yeah. Next Friday will be September 30th. So there'll be a fair amount of action about cleaning up portfolios, getting into month-end type thing. So we'll be watching it closely, but again, everything's pretty much oversold as we come into the end of the week, with the exception, of course, of the U.S. dollar. So getting increasing questions around the U.S. dollar. Broadly, and so most people follow kind of Dixie, which is DXY, which is kind of the basket of currencies against US, and that's up something in the neighborhood of 15% year to date, which is an enormous move. And that's off of kind of global weakness, but that is a major part to what happens with kind of all other asset classes right now.
Gotcha. Okay, last call for any questions about anything we talked about or anything you want us to touch on before we get going here.
Mhm.
Looks like a nice weekend. Are you guys heading over to Carp Fair at all, or no?
Potentially Sunday morning.
Yeah.
Depending on activities and such.
Yeah.
So yes.
Little known fact, when I was a young 4-H member, I had prize-winning potatoes in probably like 1988 at the Carp Fair.
There you go.
There you go.
Maybe I'll see if I can find your name somewhere.
I don't know. I don't know if they keep that like on a plaque or something, right?
Yes.
Prize-winning potatoes. There you go. Well, no questions there, so we'll leave it on a high note, and I guess we'll see everybody next week.
Sounds good. Thanks,
Okay.
everyone. Take care.